Welcome to the deep dive. Look, you get hit with so much information every day. Our job today, July 8th, 2025, is to cut through that noise. We want to pull out the really important bits from the global news you've shared with us. Think of it as, your shortcut to being properly informed. Okay, let's dig in. So, first up, a pretty big economic shakeup. Stocks actually dipped after President Trump floated the idea of, well, potential delays and much higher tariffs. We're talking up to 70% for nations aligned with BRICS. Brazil, Russia, India, China, South Africa. That's not just talk, it's a potentially massive shift.
Yeah, and what's really interesting there, beyond just the stock sliding, is how other assets reacted. Like gold, it was hovering near, what, $3,331 an ounce, kind of caught in a tug of war.
Tug of war how?
Well, you've got strong demand because people are nervous about the tariffs, seeking a safe haven,
Yeah,
right?
yeah.
But then Treasury yields are rising, which usually pushes gold down. So the fact it's holding that high,
Yeah.
it really tells you investors are prioritizing safety right now. Signals some deep uncertainty, I think.
Okay. And sticking with surprising market stuff. Iron ore. Prices held pretty steady, around $95.25 a ton. Even with China's demand cooling off a bit and, all these trade tensions ramping up, that feels a bit weird, doesn't it?
It does seem counterintuitive.
Yeah, I mean, China's seaborne iron ore imports actually dropped 4% in the month, but the price didn't really budge, apparently due to supply issues and restocking. What's that tell us? About resilience, maybe? Or market psychology?
That's a really sharp point. That stability, despite weaker demand signals, suggests the market might be looking past immediate consumption.
Yeah.
Maybe more focused on, long-term supply worries, building up inventory.
Hedging their bets?
Possibly. Are they expecting things to bounce back quick, or maybe fortifying themselves because they think these trade issues could actually get worse? It really makes you wonder. And look, it gets specific too. Like Indonesia's palm oil exports to the U.S., they could drop, what, 15, 20%? All because of a threatened 32% tariff. Shows how targeted this pressure can be.
Okay, so from trade volatility, let's jump over to energy. OPEC Plus announced they're boosting oil production in August by 548,000 barrels a day. That sounds like quite a bit.
It is a pretty robust increase, yeah.
So what's the signal there? Especially with Saudi Arabia apparently leading the push to grab back market share.
Well, it's a clear sign, especially from the Saudis. Either they're really confident about future demand, or maybe they're just aggressively trying to squeeze out competitors. It's a move that could definitely sway global energy prices, reshape things a bit. And it's not just oil markets feeling the pressure. Tech is getting squeezed too.
Right, like Samsung, forecasting a huge drop in Q2 profits.
Huge. A 56% plunge. Staggering, really.
And they're pointing the finger directly at U.S. restrictions on selling AI chips to China.
Oh.
A 56% drop for a giant like Samsung. That feels seismic. What does that specific case tell us about the real-world impact of these trade fights on tech and supply chains?
That's exactly it. It's not just abstract numbers, is it? It shows the very real strategic tightrope companies are walking, caught between these global powers. It just highlights how deeply tangled trade, technology, and politics have become. Big players are having to completely rethink their business, their suppliers, everything.
And shifting gears again over to diplomacy. We saw the EU pump the brakes on a joint climate pledge with China. They're pushing for tougher emissions targets before some big summit. That seems to show climate talks are getting more leverage in these bigger geopolitical chats, right?
Oh, absolutely. It shows environmental goals are now serious bargaining chips, on the international stage. And it's interesting because while the EU is applying pressure, you've got Australia's PM Albanese planning a visit to China this weekend.
Oh, for what?
To talk about more cooperation, actually, on things like AI, green energy, plus a trade review. So it's complicated.
Yeah, a real mix of pressure and cooperation.
Exactly. A very nuanced picture when it comes to relations with China right now.
And, while we're tracking all these big shifts, power, economy, trade, it feels important to remember the human side, the history behind it all. We also saw that incredibly powerful story from Hiroshima, a volunteer still recovering bone fragments from Hiroshima Island, honoring victims from the 1945 atomic bombing. How does something like that quiet, persistent act of remembrance, how does it sit alongside all the tensions we're talking about today?
That story, it's just such a stark reminder, isn't it? That underneath all the data, the politics, the maneuvering, there are profound human costs. Honoring victims from 45 like that, it really underscores the devastating long-term weight of conflict. It puts today's disputes, the tariffs, the diplomatic standoffs, into a pretty chilling perspective, history's echoes. they're always there, you know.
So putting it all together, what's the takeaway for you listening? You've got these fluctuating markets, shifting alliances, and then these quiet, powerful echoes of history. They're all connected somehow. Each piece gives us, hopefully, a slightly richer view of the world.
Exactly. And knowledge is really most useful when you can connect the dots and apply it. So what stood out to you today? How do you see these currents shaping things, maybe even in your own world going forward?
We really hope this deep dive gave you some clarity, maybe a fresh angle. Keep digging, keep asking questions. We'll be back here to help you make sense of the next wave.